You got to be asking yourself, with all the good news on the horizon between the safe banking bill and the reclassification of cannabis, what is going on? Why do these stocks keep selling off? As I mentioned in my last update of Tilray, one of the biggest problems is that cannabis investors have been burned so many times in the past that many of them are hesitant to get back in the space. And until the reclassification occurs, the big institutions can't even invest. So it's entirely retail investors that are in this space right now. To make matters worse, now that the House of Representatives has ousted Kevin McCarthy as the Speaker, they don't have any Speaker of the House right now. A key part of the parliamentary process is that only the Speaker is allowed to introduce new bills, which means the safe banking bill, even if it goes from the Senate to the House, can't be introduced until a new Speaker is chosen. Also, we're still in the middle of that 45-day continuing resolution, which meant that the budget discussion got postponed until Thanksgiving. So the chances that they're going to introduce new legislation like this are slim. Congress is going to have its time occupied with negotiations and battles over the budget. So the safe banking bill is on the back burner. Because of this, the cannabis sector has been selling off pretty spectacularly. A big pullback from the rise that we saw a few weeks ago. There is a bright light on the horizon, however. If the reclassification of cannabis from a Schedule 1 to a Schedule 3 takes place, experts like Danny Moses says that they won't need the safe banking bill. The safe banking bill would allow American cannabis companies to get bank accounts, accept credit cards as payment, and get loans. However, if cannabis is reclassified from Schedule 1 to Schedule 3, those companies will be able to do that without a specialized bill. We have no idea when the reclassification is going to happen, however. The Department of Health and Human Services did recommend to the DEA that they reschedule cannabis a few months ago, but we don't know when that's going to happen. It could just be a surprise, at which point these stocks could rally. In the meantime, they may continue to demonstrate weakness, pulling back even further and even potentially to their all-time lows. The final nail in the coffin to Tilray came when it reported bad earnings. It missed. Analysts were expecting a loss of 5 cents per share, but instead Tilray doubled it with a loss of 10 cents per share. So Tilray's become very weak. As a result of Tilray's pullback, I've been adding to my position, with my next buy order being filled on October 9th. Adding 4.16% to my position at $2 even, since I'm continuing to play with the house's money, using funds that I had gotten from trading Tilray back in 2018. This buy locked in a 98.86% discount, replacing some of the shares that I sold for $174.83. The buy did raise my per share cost $2 from -$7 to -$5, but in my portfolios, a negative per share cost means that I've taken all of the original capital out of the position, in addition to $5 per share in profit of what I still hold. I will keep adding to my Tilray position with my next buy target at $1.80, which you can see is just above the gap fill that it saw several months ago. From here, since this is a long-term investment for me, I do not have any plans to take profits until it starts to reach a key point of resistance that it saw back in 2021. So my next sell target isn't until $54.59.